Great to have you join us in another edition of the program, Capital Market Live on Channels Television. I'm Ladi Williams. First, let's begin with a review of some of the major equity markets outside our shores. We start with the U.S. markets, which closed Friday's trading session broadly negative, with investors remaining on edge over the Russia-Ukraine crisis after U.S. officials say they expect an attack from Russia in a few days. The Dow Jones Industrial Average closed the day lower by 0.68%. The Nasdaq Composite was the hardest hit, declined by about 1.23%, while the broader S&P 500 index dropped 0.72%. The three indexes lost more than 1% each this week. And in Europe, the major markets indexes also were affected by the Russia-Ukraine conflict, with travel and mining stocks mostly affected by the downward trend. UK's FTSE 100 fell by 1.47%. Germany's DAX was dropped about 0.32%, while France's CAC index closed the day with a 0.25% decline. Meanwhile, across Asia-Pacific, the markets are mostly mixed on Friday as investors in the region also try to assess the risk from simmering tensions between Ukraine and Russia. Hong Kong's Hang Seng Index lost more than 1.8%. Its value, Japan's Nikkei 225, was down 0.41%, while the Chinese stocks closed higher as the Shanghai Composite gained about 0.66%. And here in Nigeria, the fixed income market was mostly bullish sentiment this week for the local bond segments as yields adjusted to reflect the unexpectedly lower rates at Wednesday's auction. Our market participants look to the secondary market to fill unmet demand from the auction. At the close of trading on Thursday, the market closed mix. Overall average benchmark yields closed at 11.28%. Benchmark yield dipped by 2%. At this month's bond auction, the Debt Management Office offered 150 billion naira worth of instruments to investors through reopenings of the 12.50% FGN January 2026 and the 13% FGN January 2042 bond. At the Treasury bills market, bullish trading sentiments continued, fueled by the downward direction of yields at the bonds primary market. At the close of trading on Thursday, buying interest seen both of the NT bills and OMO bills. Average benchmark yields for T-bills fell by 5.42%, while yields on OMO bills also fell by 6.53%. And at the unlisted securities market, activities at the NESD OTC exchange ended the third week of February deeply in the red as both security index and the market capitalization recorded a 2.21% decline. At the same time, NESD investors lost 14.23 billion naira in value, which made the market capitalization close at 62.06 billion naira this week. In contrast, 636.29 billion naira recorded on Friday last week. At the same time, the total value traded during the week declined by 80.29% as the market recorded a total of 39.42 billion naira. Meanwhile, total volume of securities traded on the NESD exchange dropped by 64.42% to 4.32 million units, while total transactions or deals declined by 31.82% to 45% this week. And from there, we move on to the larger domestic securities market, which ended the third trading week of February in the red, as the benchmark performance indicators fell by about 0.13%. At the same time, the total value of equities listed on the Nigerian Exchange Limited dropped by 0.12% after a struggle between profit-taking and bargain hunting within the week. Sectoral performance was mixed as the banking, consumer goods, and the insurance sectors of the NGX gained, while the industrial goods as well as the oil and gas sector index of the NGX declined. On the other hand, the equities performance on the activity chart was mixed as a total of 1.71 billion shares changed hands for about 30.76 billion in over number of deals compared to last week at 24,767. Meanwhile, RT Briscoe led a pack of 43 gainers, up by 53%. CWG PLC led 38 other losers, down by 9.76%, while trio of Access Bank, GTCO, Transco, and Fidelity Bank were major contributors to the total volume of shares traded this week. All right, for some analysis now, we have Mr. Mukhtar Mohammed, CEO Finance with Mukhtar, joining us, giving us his Saturday evening today. I really appreciate having you on the show today.
Thank you, Ladi. Pleasure to be here.
Yeah, so looking at the market this week, no excitement for me there. I don't know. How was it for you?
Well, the market doesn't need to be exciting this week. As you said in the report, you saw the negative trend in one of most, and then you think of volume, then you think of things of deal. You realize that the banking sector is where investors are turning. So you continue to see this trend, pending when the result begins to come in. We are seeing reshuffling. We're seeing investors moving from one equity to another in anticipation of the dividend payout that will be coming, especially from the tier one banks. And then the industrial good also, they still expect some of those companies to do well and pay dividends. So now what investors are looking at, liquidity is king. So everybody's beginning to reshuffle his portfolio. You see volume drivers. Some are looking at the capital appreciation. They're beginning to go out and seeing that the price is depressed. They've made so capital appreciation. So they want to see when the result comes out. Once one result comes out, they begin to look at others. Then they begin to take position. So you see those negative trends, positive trends, the bull and the bear trying to outsmart each other.
Right.
Pending when those results hits the market, especially from the banking sectors. Once those results hits the market, then positivity, it's either going to go the positive way or going to go the negative way.
Yes,
and if you look at the MBAS report that I've shown in and showing that the banking and insurance sectors also are one of the greatest contributors to our GDP the last quarter and the last year. So definitely that's why investors are really excited to see what these numbers are. When you look at the first, second, and third quarters from the banking sectors, where the tier one, even the tier two bank, it has been
quite
very
impressive.
Positive.
Yes, quite impressive. But looking at the market, what stock stood out for you in the week?
Well, like you said, it had to be school. I mean, gaining over 50-something%.
Quite impressive.
Quite impressive. And nobody knows what is driving that stock at the moment. So it could be the penny stock nature. It could be one deal or the other that is, I mean, about to happen, but we've not had any market breach on that yet.
And it's not like the company is announcing any
it's not
positive information out there.
Sometimes those things happen. I think people are looking at the low valuation of it in terms of volume drivers and who is selling these stocks again. So that sometimes give you a reason where you see what you see. But if you think about what really is one stock that is really driving the market for some weeks now and still moving strong, I think it's Guinness Nigerian PLC.
Yeah, Guinness is
from a low by this time last year where it was in a low of about 16 naira, so moving up to the height of 70 naira at the close of market this week. And Nigerian Brewery also came up with their result of 1 naira 20 kobo.
Quite impressive
so
result.
Investors are beginning to say, look, with the kind of liquidity we see in Guinness, if the first, second, third quarter result, and that's why you're seeing that. I think for me, that's one stock that is really driving the market at the moment. Investors are excited, but unfortunately, you can't even get it.
Quite interesting. Well, talking about decliners now, we see CWG PLC led decliners. What do you think drove sentiment with that one?
They've not been really news on those sectors. I mean, CWD, they've not really excited investor with anything thus far. So you expect once you see the stock market is driven by perception and results. Sometimes perception will take you to a level. The result will either sustain you or bring you back to where you will be. So when you see some of these movements and then the results are not able to sustain those movements, that's why you see the downward trend. So you could see Atribis could gain about 53%. If the result comes out and is not able to sustain that gain, you see it drive down. There will be a lot of volatility there. So that's why people will tell that at this period in time, you buy fundamentally strong stocks. And when you look at the fundamentally strong, you see they are in the consumer goods sector, the industrial goods sector, and the banking sectors. If you are advising any investors, especially when you look at the trending inflationary figure that I just came in from Bureau of Statistics and others, then you want to tie your liquidity or your money in those stocks that will pay good dividend. Especially if you look at a stock like Zenith Bank, if you look at what they paid last year, if at all they now paid the same amount this year, you are making about 9% already in dividend yield. So that could be very impressive. And like you said, in the fixed income space, you're not getting that yield in 1 month or 2 months.
Right.
It's depressed. So definitely when those numbers come, we might see a little bit of movement from the fixed income space to the equity space for the short term, especially when you look at the dividend yield. in some of these stocks when the results are out.
All right, talking about, stock picking now, most regulators are looking at rate hikes at this point. And, take for instance, right here in Nigeria, we get, a rate hike. How do you pick stocks, in a situation where tightening is about to happen?
That's why we talk about fundamentals. And you look at fundamentals, and some tightening will help improve some sector. Some tightening will help bring down some sectors. So you need to look at the tightening, where it's coming from. Any increase in interest rate will mean that cost of funds goes up. And once cost of fund goes up, then you know that means the banking sectors are going to benefit from it. So you go to that sector. And then you look at other sectors that are into a lot of borrowing. Then you know that that's not a sector to go into now, because the cost of funding has gone high, especially with the tightening. So you need to look at the policy to
That's a very interesting cheat sheet. I'm going to look into that one. But okay, we're going to next week now. What are your expectations, for the market next week?
I don't see anything new. Like I said, Ladi, I don't see anything new. We'll see those movements. And if those results comes in, normally by next week, we are supposed to be seeing results from bank like Zenith Bank, and then we know there will be corporate action. We'll see results in the coming weeks from other banks. But I think between Zenith and Gitco, we could see those results comes out, and they could just be the turning point. Because you look at the market, between the month of January, you sometimes see a little bit of movement, then you see a slowdown by February when those numbers comes out, and they're impressive. And if they are not priced in, that's another thing. Sometimes this result comes in, those stocks have already been priced in. You might not see the kind of movement that you expect to see, especially when it's priced in. But I don't think with what we see in the first, second, third quarters of the Tier 1 bank, I don't think this current price has already been priced in. I will see some little bit of movement, but maybe not the kind of quantum movement we think about. But there will be movement, especially if a stock like Zenith Bank comes in and say, look, we are still paying our number 2 naira 70 kobo. That makes it a year in of about 3 naira. That makes it a good stock. Then it could also comes in. And then sometimes you don't see those movement in those stock after they have been marked down and the first quarter result comes in. Remember, they are going to pay interim dividend. You could begin to see those movements. So the market is dynamic. Sometimes it's like I say, it's perception. Sometimes people perceive, and then, but really now when you look at our economy, when you look at the market, when you look at the fixed income space, when you look at all the spaces, you just think to see a dividend yield of 9% within a short period of 3 months or 4 months is better than a fixed income yield of about 3.something%, 4% for 180 days, 190 days, 300. So
all right. Investors. So, what are your stock picks, for next week? What stocks are picking your fancy, if I may say?
I think Zenith Bank will still pick my fancy, just the fact that the result might come out. I think in the industrial goods sector, Lafarge Africa, also Lafonco, will still pick my sector. Basically, because when you look at Boa Cement, you look at Dangote Cement, realize the price those are selling are far above. So you do what we call comparative analysis. You want to see that those movements, and the result also has been good. I think. Then again, I always say, it depends on the numbers, depends on where you're sitting, because depending on what you're looking. We must never take our eyes off Access Bank. It has moved from 7 naira to 10 naira 30 kobo. That's also a good pick for me. And then also Guinness is still there. If those results comes up, I don't see a slowing down in the price of Guinness. I think for me, those are my 4 picks. But if you tell me to pick the Tier 2 bank, I think I go for Fidelity Bank. Okay. The result has been very, very impressive. They've been very impressive in terms of dividend payout, in terms of those results. So I expect those numbers to be positive. But it might not be positive in the coming weeks. But I expect it to come up with those good numbers before the second or third week.
So I guess it's just short-term holding versus
short-term holding. But that's what I talk, depending on which spectrum you are, which perception you're looking.
Exactly.
If you're looking at 90 days, if you're looking at 3 months, you're looking at 6 months, then you begin to look at your peak in terms of liquidity. And then, what people need to realize, if you go into those stocks this week and the liquidity and they are marked down, the price will depress a little before will start the upward trend. So you need to look at your strategy. Is it for liquidity or is it for long term? Are you going to hold it for 91 days? Are you going to hold it for 6 months? So it depends on your strategy. But you can miss it, especially with the dividend yield from some of these banking stocks.
So I guess it's all about strong hands, at this point. All right, we'll be talking about, commercial papers, after the break. It's growing in popularity now for, companies looking to get some income from the market. All right, we'll continue the conversation after the break. Do stay with us. This is Capital Market Live on Channels Television. Welcome back. Now let's look at some news that made headlines in the week. Pan-African credit rating agency Gusto & Co. has become certified as an approved verifier by the climate bond standards to perform verification of green bonds, projects or assets in Africa. As an approved verifier, Gusto & Co. will assess projects' eligibility under the climate bond standard criteria for solar, wind, marine, bioenergy, recycling, forestry, as well as transport. Also, the ratings agency can help companies in Africa unlock access to local and international funding options. And Nigeria's headline inflation rate fell marginally by 3 basis points month-to-month in January this year, and that's according to the latest report released by the National Bureau of Statistics. A brief breakdown of data shows that headline consumer price index, which measures changes in the price of goods and services consumed, dropped to 15.60% last month from 15.63% recorded in December 2021. Same time, food inflation index also dropped to 17.13% in January, against 17.37% rate recorded in December. Report further shows that core and urban inflation were unchanged within the comparative period, while rural inflation lowered from 15.11% to 15.03%. Meanwhile, the NBS report mentions that Kogi State recorded highest rate of food inflation at 22.61%, while Sokoto State recorded the lowest food inflation rate at 14.18%. All right, now let's bring back Mr. Mukhtar Mohammed, CEO of Finance with Mukhtar. Let's drill down on this popularity with commercial papers. For you, how do you see investors, looking at commercial papers right now? Do you think they're fond of it?
No, they're not fond of it. But you see, there's investment vehicle in Nigeria, capital market or in Nigeria as a whole are very, very low. So sometimes investors want to look at what type of quick return they can have, and commercial paper seems to come up with those quick return within 30 days, sometimes as 30 days, sometimes 60 days, sometimes 180 days. It rarely goes to 360 days. So it makes investors sometimes some investors go in there that, look, instead of me just keeping that money, I may have a project, I have to do it, this and that, safe type of investment. And remember, that is a form of IOU that you give to companies, and commercial papers are normally taken by companies. Companies are the ones that normally do commercial papers, especially growth companies that are trying to improve growth in some particular area. They need this commercial paper to drive growth. Sometimes they just take it, they've done a lot of investment that the returns will be due maybe in 2, 3, 4 months, and they need to cater for their immediate needs. Sometimes it has to be with salary, it has to be with some overhead costs. So they need to get those commercial papers 30 days mostly. Most commercial papers are done for 30 days, 60 days.
Quite interesting. But what do you think, are the risks here for investors?
Well, every investment has a risk. Every investment has a risk. The risk is always there for every investment. It could turn out well, maybe if the company is going to do well. But, some of all these companies, when the Security and Exchange Commission, we need to look at their books, look at their numbers. Do they have the liquidity before you come for commercial paper? Because it's short-term loan. We must be sure that you have the liquidity to pay in the next 30 days. Buy the kind of project, because they're going to look at your numbers. So the time you have challenge with those commercial papers is when the regulators are not on top of their games. Then you have a challenge in them. But normally, it's not supposed to be so much a big challenge, because sometimes when you look at especially Nigerians, when you look at the companies that get these commercial papers, there are companies that are actually doing very well, but they are thinking of expansion in the short term to meet immediate needs. Commercial paper are always to meet immediate need, not for the long-term need. If you want to get the long-term need, they normally go for the secondary type of funding. And most companies does that because the commercial paper seems to be cheaper because of what you're going to be paying investors rather than going to borrow from bank for 30 days. The rate is high, but when you want to borrow for 30 days from investors, you're looking at a rate as low as 5 to 7%, which is commensurable to meet up your demands.
Quite interesting, but this surge in commercial papers, you think is sustainable?
Yes, because of the climate. You're looking at cost of borrowing. You're looking at FX rate volatility. You're looking at a lot of macroeconomic syndrome that are not helping SMEs, are not helping even growth companies. So they are looking for cheaper funds. But what we're seeing here is cheaper funds. You want to get cheaper funds at a cheaper rate to grow your business, especially in the immediate term, especially when you have done a lot of capital investment. So definitely, I think that is majorly the challenge that most companies, sometimes these commercial papers are just for day-to-day running of the companies in the next 30 days. They could be short for maybe an emergency creep up like what we have now. We have the fuel situation. We have surge in price in gas also, in diesel. And so they need to meet up this demand to get up production. So the easier means either you go to the bank to get an overdraft or you go for the commercial papers, which definitely are cheaper. And then it will help your bottom line than going to borrow from the bank. You have to pay almost 18%, get the commercial papers for 30 days for as low as 76%. So they are looking at cost of reducing in their overhead costs and cost of doing business.
And there's also that risk of, abuse, and what do you think, regulators can do to protect investors?
The regulators need to be on top of their game. Every abuse that has happened is because regulators have got their eyes off the mark. No abuse just happened overnight. No abuse have just come up because regulator was on top of the game. There could be one or two compromise. So once you have the regulators on top of their game, you don't have those challenges. Because regulators, you have the right to say, look, we don't think this will go based on this. And remember that you also have finance houses that are going to back up this bill. They also must be able to provide. That's why they are backing up these commercial papers. So if the company itself is not meeting it, then the commercial house, the investment house that is standing as a guarantor for this will have to pay that money to the investor. So unless, again, we are having the company not able to meet it, and we know that the investment house will not be able to, and they will approve. So investment house, that is why you have to go through the capital market. The investment house is registered with the Nigerian Stock Exchange, is registered with Security and Exchange Commission. They know their funding, what they have in funding, know that they could be able to meet up these investor demands. If the companies are not able to pay, that means the investor house will have to take it.
But what is your, outlook for commercial papers going forward at this point?
Like I said, it will grow, but then it's like you said, unless it's abuse, and then we see one or two abuse, then we could see a slowdown in that. A lot of commercial papers have been issued, and they've not been abused. That is one thing we must say. Even Dangote Sugar have done a lot of that. Dangote Cement also, they've done a lot of commercial paper. Even most of the conglomerate also have done commercial papers, and they've not been abused. The regulators have been on top of their game, and most of the people that invested in this commercial paper have not gotten their fingers burned. They've got their money paid to them. It's a more safer, less volatile investment. It's more or less like the fixed income investment, more or less like the bond.
For those that don't have the risk appetite.
Yes, yeah. But again, like I said, it's between 30 to 60 days. Sometimes people don't want to keep their money for that long. They have it's a particular project in the 60 days time or 90 days time. So, and mostly these commercial paper are always patronized by high net investors. High net investors are the ones that come in, not the normal average investors. They are not retail investors. Let me say retail investors normally don't go for commercial papers. It's high net investors, institutional investors that go for commercial paper because of the large funds that they have to go into these papers and the return that will come in from there in the shortest possible time to meet up other demands and also help in their bottom line in the shortest possible time.
All right, quite interesting. We'll keep tracking, to see how these commercial papers actually play out in the market and impact the Nigeria's financial sector. All right, thank you, Mr. Mukhtar Mohammed, CEO of Finance with Mukhtar. It was great having you on the show today.
Thank you, Ladi. Always a pleasure.
All right, so, well, let's take a look at what's coming for next week. You see the CBN as a roll of about 115.28 billion naira worth of maturities of primary market auctions, 230 billion inflows from OMA maturities, and 49.89 billion FGN coupon payments expected. At financial markets, fixed income markets, the eye on the FAC allocation for more companies to release audited full year 2021 earning results on the NGX. We'll be looking to see how all of this impact the market. All right, that's it on Capital Market today. Thank you so much for watching. I'm Ladi Williams. Bye for now.